what we're doing here in Las Vegas and what we're trying to do is go to the next level. Now, since we have an open mind, let's do some trades that create incredible returns that your financial advisor, remember them? You don't like that. You all get the willies when I say financial advisor. Ooh, we don't want to. No. Okay. That would make them say your returns are off the charts or unsustainable. Why? Because they don't know how to do it. Do you get it? All right. So your money beliefs here is everything. Number one belief, and I've heard you, almost all of you say this to me when you first come to this program, I'm not good at math. I've never been really good. See, I'm more of a creative person. I don't really get the whole math thing. Right. But when you put your money in that brokerage account, and you buy that stock and you sell that first call option, I notice you all become very good at the rate of return. There's something about your money being in the market that makes it real, right? Okay, so your beliefs are everything. The reason I touch upon that is because today we have to go back to this double your money trade. This is a problem with it. The problem really is risk. But before we get to that, I think based on the work that we did yesterday, Carl Icahn, you all can see Carl Icahn, his net worth as of March this year, $14 billion. Now, do you understand how you get to $14 billion? After what we did yesterday? Yes? Okay. So that should not be so much of a foreign concept to you. Lawrence Fink, CEO of BlackRock, $340 million net worth. And as I said yesterday, that's what's in the country, right? Okay? Because I'm sure if there's $340 million in the country, how much do you think is in the Cayman Islands? At least $62. That I'm sure. Don't want to pay the government on those 62 bucks. Here we go. I was doing some, talk about your thinking. I was doing a seminar in New York, and some of you remember we had this event, and this guy started standing up and he was screaming. He's like, "You're teaching people how to make all this." Do you remember this? Who's there? "You're teaching people how to make all this money." I'm in the middle of my pitch. I'm killing them with the humor. I'm knocking them out. This guy stands up and runs the whole show. "You're teaching all these people how to make money in the stock market. Do you know how much taxes they're going to have to pay on that money?" And I thought to myself, it's a minor technicality, but you have to have income to have income tax, right? Am I right about that? Right. So you would want more income, even if your taxes rose, at least you have the ability to pay it, right? So the day that my accountant comes to me and goes, "Mr. Jackson, you owe the United States government $42 million in taxes." Will I be happy? No, I won't. It's $42 million. But I probably made $150 million, right? Do I mind paying my share? I'm not saying there isn't a conflict. I'm just saying that I will pay my share. All right, here we go. George Soros, net worth of $20 billion. Now do you understand how that could happen in a lifetime? You could start from zero and get to $20 billion. Based on just the one trade we did yesterday, you get how leverage using options in your portfolio can create terrific things. Do you get that? Okay. So the only question left is you. I do this program, A, because I love trading stocks. I discovered that I have this gift for teaching and communicating when I didn't know, but I found that out earlier. But this program is all about you. Now that sounds nice to say from a stage in front of a group of people, but I really mean it. And Patty can tell you, whenever we have our meetings, I say, no, it's about them. If they're not having a good time, if they're not comfortable, if they don't understand this math, it's about them. Is that correct? It is not about me. I am here to help you. As I tell you all the time, I'm a vehicle. I'm happy to have this knowledge, be able to express it for you to go home, but do I want you to double your money as frequently as possible? Yes, but I want you to do it with a lower risk. Does that make sense? Okay. And if your money, with any given period of time, 3 months, 6 months, and the money that you have in the stock market only increases 39%, does that suck? Great, let's keep it in perspective. Guys, if you make 30%, 40% on your money within a 6 or 7 month period, that is good. Like, don't get spoiled with these covered call returns because they're beating the mutual fund. So some people say, I noticed that, the market is down, but my account is even. That is good. If you're even when everybody else's account is down, that's covered calls at work, okay? So it really is about you. Now, why have I prepped you in this way? Because now we have to get into some complex hedging strategies so that if the trade in these ETFs does not go your way, you won't lose money.